What's up, everyone? It's Karthik with MoneyVest, and what a crazy day in the markets. And I think I can speak for everyone here that I'm just glad that it is over. I was just waiting for that 4 p.m. market closing bell because the NASDAQ down over 3.6%. We had the S&P 500 down over 2.3%, the Dow Jones down over 1.2% on the day. And I think it's best that we don't look at our portfolio today because it was just a free fall in technology more specifically, but the entire markets here were selling off quite aggressively on the day. So down a little bit over $22,000, 22 big ones. And I'm sure if you are more concentrated in technology like I am, I wouldn't be surprised if you are down more than that given the size of the portfolio, or if you are down in the six figures as well. Would not surprise me one bit. And this is the beauty of the market, right? This is quite literally the beauty of investing. Some days are green, some days are red, most days are green, fewer days are red, but those fewer days that are in red are the sheer the gravity of that situation is significantly more. The sheer size and scale of those red days are significantly more because of the market's nature of staircases up and then elevators down. But nonetheless, we're going to smile here. I really want to take a time for all of you to take a deep breath, right? So come back. We're going to meditate for a bit. Just close your eyes, take a deep breath, and just relax, okay? It's part of the market. It is what it does, right? It goes up, it goes down, it goes up, it goes down. It's a cycle that repeats itself over and over again. Not only is this just an investing channel focusing on individual stock analysis or market analysis, but we've also got a therapy session for everyone because of the losses in the market. So I think we can come together as a team, as a community, and again, console each other because we've got brothers and sisters in the markets together that are going to be down significantly on days like today. So I think it's good that we've got that community to come together and again, focus on the future, right? So we know that this is going to happen every so often. We understand that. And it's just about how we can take advantage of these days and how we can dollar cost average a little bit more, just be a little bit more aggressive, be more smart about the decisions that we make. And that's exactly the whole point of these videos, is to help you better understand when the opportunity is right to start dollar cost averaging a little bit more aggressively. And this right here are some of the memes, so I just couldn't help myself. Welcome back to work, time in hand. So I think it's going to be most of us after today. And there was one more meme, which is one of my favorites. This is, again, bought the dip, the actual dip. This is the dip of the dip. And then, of course, we've got the dip of the dippity dip dip, which is the market just keeps on falling. And there just doesn't seem to be the end of any dips. It just turns into a bigger dip, and a much bigger dip, and then the real dip, and then just the dip of all dips, and just it keeps on dipping. And there's no end to it. So that's where we are. And again, just speaking of dips, we are quite literally in a dip. S&P 500 is down over 4.3% from its all-time highs as of the time of this recording. So we are quite literally in a dip because that range is between 0 and 5%. A pullback is between 5 and 10%. So a pullback is going to be 5 to 10%. So the NASDAQ is in a pullback, down over 7% at the moment. So S&P is down 4.3. NASDAQ is down over 7% from all-time highs. And we are in a dip and a pullback respectively for the S&P 500 and the NASDAQ. So this right here is the MoneyVest index. This is where we are. This is the value that I calculated towards the end of the day, and 3.57 is where we are. Remember, the moment this number comes below 3.5, it dips below 3.5, is when I will personally start dollar cost averaging back into the market, be a little bit more aggressive. I'll start deploying cash into the market. So again, if you want to get access to all the alerts, find out exactly what I'm buying, what I'm selling, all the trade alerts, all the trade ideas. I did close out my covered calls on Tesla for over a 96% profit, but now it's time to start selling puts and at the same time start buying back into the market. So if you want to get access to all the alerts, link's going to be down below. We've got 3-4 more spots left, and there is a 51% discount available to the MoneyVest beta launch, and you can lock this pricing in forever until you cancel, and that is available until the end of this month as well. So this right here is going to be the entire platform. Again, you can come over here to different dashboards, and also we're going to be adding a lot more features, a lot more dashboards, a lot of new tools over time for all the members in the future. So again, link's going to be down below. Would love to have you on board. If you have any questions, feel free to reach out. So coming over to the MoneyVest Index again, so 3.57 is where we are at the moment. And again, the lower it gets, the better the opportunity will become. Anything under 3.5, as it gets closer to 3 or 2.5 or 2, is where the opportunity will be. And this was the brutal sell-off on the day with Microsoft, Nvidia, Apple, Google, Meta, Amazon, Tesla, of course, down over 11%. Did a video on them earlier today. The entire semiconductor sector, financials, we had asset management, we had industrials, consumer defensives, we had a little bit of energy, real estate, all selling off, healthcare plans, and utilities, as well as a little bit of consumer defenses were the only sectors that were pushing higher on the day. But of course, majority of that sell-off was in technology. So if you've got a portfolio concentrated in utilities, healthcare, and energy, I don't want to talk to you. Don't comment on these videos. No, I'm just kidding. If you do have those stocks in your portfolio, congratulations. You most likely were able to survive the sell-off from today because it was mostly concentrated in tech. But no, that's smart if you do have exposure to utilities or energy or healthcare, because again, those are the sectors that did really well on the day, kind of held up, outperformed compared to technology and comm services, which were down over 3.5%, close to 4%. In the last 1 week, again, majority of sectors are red. Utilities is the only one that is up almost 1%. In the last 1 month, again, most sectors are green, with again, technology and communication services selling off, and of course down on the last 1 month. Volatility was higher, up over 15 to 16%. So if you come over to our TradingView chart, you'll notice that VIX was up to as much as 18. We just crossed over 18, up a little bit over 22.5%, a level that we haven't seen in a very long time, since April 19th, April 20th. That was the last time we actually got a pretty nice, pretty decent buying opportunity. The VIX at the time was over 21. So if you do end up, let's say, as high as 21 here, same time from back in 420, so April 20th, that's going to be a very nice buying opportunity for us. And this right here is going to be that MoneyVest Index. So right now, consider we are at 3.57. But if the VIX gets up to over 21, 22, we'd be once again closer to low threes for this MoneyVest Index, which again is going to be corresponding to the April 20th low, which again was the last serious buying opportunity for the market. So I'll keep you posted. I'll keep you updated with where we are. This again is a more of a private reading for MoneyVest Index for all of our members. So in our future market updates, public videos on YouTube, I may not share exactly where we are with the MoneyVest Index, because the hit rate, the win rate for this is really, really high, and I'd much rather keep this private and useful to all the members. And again, this is eventually going to make its way over to the MoneyVest platform as well. So it's going to be available under the macro dashboard. There's going to be another tab called MoneyVest Index, and you can track this on your own for yourself and take a look at where we are with that index. So coming back over to the market here, Bitcoin just over 65,000, Ether just a little bit under 3,400 as well. And then again, coming back over to S&P 500 and the NASDAQ. So this right here is going to be some of that analysis. So by the way, volatility at over 18. This right here is the first green rectangle that we're coming up to, between 18 to as much as 21. And the next one's going to be all the way up to 28 to as much as 36 for volatility. And of course, all the way up to as much as 62 to as much as 90. So those right there are going to be 3 levels to watch on the volatility. S&P 500, this right here is the entire sell-off. I have shared the analysis on our Discord, pretty much mentioning that this is going to be that next level to watch for S&P 500. That's going to put us down a little bit over 7% from all-time highs, which again is not a surprise, something that's very reasonable. It's going to be a bit of a pullback for the market, and also the RSI is going to be coming down. The L3 banker oscillator is going to come down, and that was the same exact pattern that we witnessed back in April 2024, right? So earlier this year, so around April 18, 19, 20th, we saw the S&P 500 come down, and at this point, it essentially sold off from its all-time highs a little bit over 5.8%, so just under 6%. We did again see a bit of a pullback for the S&P before rallying up to new all-time highs, and it again pushed over 14-15%. So that right there is going to be that next support level to watch for S&P 500. Talking about the NASDAQ here, NASDAQ also in a very similar situation, selling off down over 3.6%. Next support is going to be down as low as 16,500. Again, RSI is coming down. The L3 banker oscillators also rolling over, and from its all-time highs, like I said, it's down a little bit over 7.5%, already in a pullback territory. And next level is going to be down as low as 16,600 to 16,550 for the NASDAQ as well. So bottom line is, again, there is absolutely no need, I'm going to say this again, there's absolutely no need for you to feel scared or for you to feel like, oh, the sky's falling apart, there's so much to worry about. Can the markets go lower? Yes. Can the markets sell off down another 15, 20, 30%? Yes, they could. There is a probability that they actually continue to sell off, right? The idea is not so much about when the bottom will come in, right? Where's the bottom, or when the bottom will be there for the market. That's not the whole idea. That's not the idea at all, right? We're not trying to pick bottoms here or time the market. What we're trying to do is understand when the risk reward starts to look attractive. When is the market going to be in a position where the risk, the downside risk, is going to be outweighed by the upside potential, upside reward, right? When is the reward more than the downside risk? And when that happens, we can comfortably start dollar cost averaging back into the market and be a little bit more aggressive. As you can see that it's consistently made these higher highs and higher lows. So it's kind of very easy to identify that it actually, makes a higher low here, pushes up and then comes back down, makes another higher low, pushes up and then comes back down, makes another higher low, pushes up, comes back down, makes another higher low, pushes up and then comes back down, makes another higher low. So that's the overall pattern that the S&P 500 has been following since 2023. Now, if that starts to break down, so for example, if S&P from this higher high and higher low breaks down, doesn't kind of validate this higher low, but instead breaks down further, then we've got a lower low, right? So then we're going to be focusing on where that next higher high is going to be, somewhere around here. So that's going to be that previous high, that's going to be that new high, and now we're making a lower high and lower low pattern. So that would be a bit of a downtrend for the entire S&P 500. And in those circumstances, it's possible that we actually do witness a bit of a bear market, not just a dip or a pullback or a correction, but more likely a bear market. And this is exactly what we witnessed here in 2022 when the S&P was straight up making lower highs and lower lows. As you can see over here, just going down, and it was down a little bit over 20%. Well over 20% from its all-time highs, considering that it was in a bit of a downtrend. But eventually what happens, of course, we consolidate sideways, we find some strength, and then we continue to rip higher to new all-time highs. Eventually, that is the story for, in this case, we're analyzing the NASDAQ, but S&P's also got a very similar chart. As you can see, the overall higher highs and higher lows. So the next support really is going to be down here at around 5250, down to as low as just under 5,000. And keep a close eye on volatility, and definitely keep a close eye on the MoneyVest index, because that has a almost 100% win rate going back several years when we have looked at and again back tested our strategy. So coming over to individual stocks, starting with Apple, and Apple here pulling back, rightly so, because it was extremely overbought as we discussed in our previous videos. RSI coming down, L3 banker oscillator coming down, starting to break down from the support here. Again, not a surprise, and that next support is going to be all the way down to as low as sub $200, but maybe one more support sitting right here at $206 for Apple, considering that it's bounced off of that level here, push higher to new all-time highs, and that is going to be that next support and target to watch for Apple. Talking about Amazon also selling off quite aggressively, down almost 3%. Next support is going to be all the way down to as low as 170. In fact, if I were to bring this up a little bit, it's going to be sitting roughly at 173, 175. And then one more support sitting right over here for Amazon. So a couple support levels to keep in mind, 173.50 down to as low as 166. RSI coming down, L3 already really, really low at the moment, but I wouldn't be surprised if it actually ends up down to 170s in the near future. Talking about Tesla, and Tesla here, of course, selling off after the breakdown from the symmetrical triangle on post earnings. I do believe it's a bit of an overreaction from institutional investors. I did a video earlier today, so make sure that you do check that out. But we're back in the 215s for Tesla, down over 12%. Next support is going to stay up at $208 a share, all the way down to inside this green rectangles where the area of demand is in the 180s, down to as low as 140s for Tesla. Talking about NVIDIA now. NVIDIA also selling off quite aggressively, down over 6%, starting to break down from this support in this area of consolidation. And the next support is going to be down as low as sub $100. Unfortunately, that's going to be sitting roughly at $98 a share for NVIDIA, kind of aligned with this higher low, and also aligned a little bit with this previous resistance, acting as a new support for Nvidia. So that is going to be sitting in the low 100s to high 90s for Nvidia company. Talking about advanced micro devices, now AMD breaking down quite aggressively, so down a little bit over 6%. As you can see that it's coming back down to inside this green rectangle and an area of demand. If it continues to break down further, next support is going to be down as low as $130. RSI is very oversold, so is the MACD, so is the L3 banker oscillator. So I don't really think that this is going to go on for a very long time. There is going to be some exhaustion in the selling pressure, and then that's where it's going to find a bit of a stabilization and then starts to recover back to the upside with a bit of a reversal trade. So support level is going to stay put at $130. Again, first area of demand sitting exactly where the price is in the 140s at the moment. Talking about PayPal here, and PayPal also breaking down a little bit over 2.7%, so definitely selling off quite aggressively. Next support is going to be down to as low as $57, $58 a share. A lot of consolidation inside this green rectangle for PayPal, and a resistance all the way up to as much as $65 per share for PayPal as well. So a lot of consolidation sideways, resistance all the way up to $65, support level at $57 for PayPal. Talking about Visa, and Visa also selling off quite a bit, down over 4%. So I've got a video on Visa coming out post-earnings, so we'll be taking a look at this company's numbers as well. Very strong area of support and demand now that it's sitting in, roughly in the 249, 250s at the moment. And resistance and target's going to be back up to 265 to as much as 260s for Visa as well. So that right there is going to be that resistance area of supply. And again, we're still trading within the context of this lower high and this lower low. Talking about Meta platforms, and Meta here also consolidating sideways, selling off down about 5.6%, coming back down to the support level that we identified in our previous update. That's going to be sitting roughly at around $450, and the next support, in case we get a breakdown below this, is going to be sitting roughly at around $420 per share for Meta, with a resistance all the way up to $540 for this company. Netflix, on the other hand, also starting to roll over a little bit, so down about 1%, just really consolidating sideways in that range, and that next support is going to be all the way down to $598, close to $600 per share, down to as low as $536. We've also got a massive gap to fill for Netflix ever since the earnings release of January of 2024 for the quarter ending in December. It's not really come down to fill those earnings gap here, and that's going to be sitting roughly in the 500s to as much as 530s for Netflix. Coming over to Google, and Google here also rolling over quite aggressively, down about 5%. So the entire Magnificent Seven, you'll notice, with the exception of Netflix, everything was down anywhere between 2% to as much as 12%. But then if you exclude for Apple, Amazon down 3%, and everything else was down at least 3 to as much as 5, 6, 7, and over 12%. And Google also selling off, and as we had discussed in our previous videos, would not be surprising to me if you do end up, let's say, inside this green rectangle area of demand in the 165s for Google as well. Talking about Microsoft, and Microsoft here also with a pretty aggressive sell-off, down about 3.5%. Breaking down from this support, we're going to go ahead and turn this level back into a resistance, and the next support and target's going to be all the way down to as low as sub $400 for Google. So 397 is kind of aligned with this previous area of support, and we've got, of course, a huge area of demand inside this green rectangle for Microsoft as well. And finally, we come over to Costco and Enphase, so ENPH. Saw probably the stock that had a very strong day, up a little bit over 12%. Everything else was only up like 1 to 2%. Enphase was the only company that actually went higher by over 12% on the day here. So very, very significant increase. Next resistance and target is going to be 140s. That's pretty much the target where we have gotten rejected once, twice, 3 times. Support level is going to stay put inside this green rectangle here in the low 100s to as much as $95 a share. And Costco also starting to break down from this area of support. So this right here was a area of support here for the longest time at $840. Starting to see a bit of a breakdown, and the next support is going to be down as low as $785 for Costco as well. So bottom line, folks, I've got a message for everyone is to chill out, relax, meditate. We've got a huge community that you can access and be a part of. This is going to be important for you more than ever, because you can talk to a lot of experienced traders, investors who've been doing this for years, some even for more than decades, that you can, again, glean on their wisdom and better understand that these are just market cycles that have happened over and over again. And again, this is, I think, going to be very useful for you to understand that this is just part of the market cycle. And it's really important to understand that, okay, now the buying window is opening up, and now is the time to start dollar cost averaging back into the market as the volatility increases quite significantly. And we do also have the Money Vest Index coming down quite aggressively. So start looking at opportunities. I'm going to be sharing my entire shopping list on our Patreon later this week with individual stocks and my buy targets on them as well. So again, if you want to get access, link's going to be down below. I'm opening up a few more spots if you're interested in joining with a 51% discount and a 16% annual discount available as well. So always happy investing. I'll see you all in the next video.